The start of a new tech bull market. That is how my next guest sees the current market set up, with the tech sector up almost 2% so far this week. Joining me now to discuss, Eric Jackson, EMJ Capital founder and president. Welcome back.
Good to see you.
I mean, haven't we already been in a tech bull market?
Doesn't feel that way. If you've been investing in any tech stocks outside of the Magnificent Seven.
You've been in the wrong ones.
The Mag 7 has been amazing this year, but for everybody else, including non-tech, 2023 has been, a so-so year after a disastrous 2022.
So are we talking about like higher growth, higher valuation tech?
No question, no question. If you
bull market for those stocks.
For everything across the board. Nothing can happen without the Russell participating in this. Even though Russell is not necessarily tech, I don't think anything outside of the Mag 7 in tech can work unless the Russell works as well. And as you know, on Tuesday was a very significant day for the Russell. It finished almost up 6% on the day.
It was astonishing.
It's a 4 standard deviation move. There was only one other time in the history of the Russell where it's had that kind of move. And I just don't think you can wave your hands and say that's just another day. I think it was a page turner. I think it's the start of a new rally for the market.
I know, but aren't we like going back to like earlier chapters, so to speak? If you want to do the page turner thing, it's down 1.3% today. That had that incredible day, but that's kind of it.
Well, last I checked, the last 5 days, Russell's up something like 5%, Nasdaq's up 4%. S&P I think is up 3% for the last 5 days. ARK is up 7.5% in the last 5 days. So I think
because yields have come down.
Yeah, well, this is what I'm saying. It's hard sometimes, Scott, in the moment to recognize when something, has significantly changed. I think there was a tremor on Tuesday, and things have changed. The Fed has done a Puxatani Powell, gone back into the hibernation for, I think, the next 6 years. I think that's how the market's taking it. Yields are, day after day on the decline, on the retreat. And it's time to recognize that that's going to lead to a brand new chapter in the market.
So yields have peaked.
I think, yeah, it's a matter of waiting for the cuts to come.
When do you think those are coming?
Whether in March, whether in July, I mean,
does it matter for your?
Doesn't matter.
It doesn't matter for your view.
It doesn't matter.
You don't need the Fed to cut for your new bull market for those kinds of stocks to work.
No, because we didn't need the Fed to hike for a lot of mid-cap tech names to start to go in the tank in February 2021 is when it started. There's something really interesting. If you look at a 6-year chart of ARK, the growth tech, and you lay that on top of a 6-year chart of NASDAQ during the dot-com era, it's kind of eerie the way that they mirror each other. Huge peaks and then huge declines. NASDAQ declined 77% from its peak in the dot-com era. ARK was down at its lowest 80%. But what's really interesting to me is that it took 2.5 years for NASDAQ to fully decline after the dot-com peak. Last month, we just passed the 2.5-year anniversary of ARK's peak in February of 2021.
So you think it's bottomed. Nvidia, it's your top name?
Top large cap name. Obviously, all eyes are going to be on next week when they come out with earnings.
What do you think happens? I mean, I don't know if you heard Joe Terranova up here earlier suggesting that the next move of the market, so to speak, hangs on Nvidia and those earnings next week. We've come a long way. There's really no other catalyst. The Fed speak is whatever. What do you think about that?
I think it's important. It's a gorilla in the Mag 7 for sure. Does it hang on it? I mean, the market can continue to do well, just like we've sort of muddled through the tech earnings so far. Just because one of the names has a disappointing name. Suddenly it rebounds a few days later. But I think Nvidia will have a good report. I think it's only expensive if you think when they raised their guidance by $7 billion over consensus like they did in May. If you think that was a one-off, then it's expensive. If you think that was a sign of a secular shift and a lot of enterprises are getting into AI and building applications and models and that are going to use their chips and it's going to continue beyond just 1 quarter, then the stock is cheap and it can't work.
What about Apple? Man, it's been a good comeback, right? And now it's pushing 190.
Unbelievable comeback. And when you say, is the market going to tank if Nvidia has a bad earnings? I mean, Apple's a great example. Everybody, one day after Apple's earnings, thought the thing, was ready to kind of be left for dead, and it's gone straight up pretty much ever since. So I think Apple is still cheap. It's one of the names that I also like in the Mag 7, along with Meta and Tesla, which I own all 4. I think Apple can still work. It's an iPhone story. It's a services story. People are still buying this thing, and they will, and they'll continue to spend money on the Apple platform.
All right, good seeing you again. Thanks for being here. It's Eric Jackson joining us here at Post 9.